Welcome, everyone. I'm so glad you're here. Tonight, we're diving into a topic that's being called the investment opportunity of our lifetime. I know that sounds really extreme, but wait till you hear the numbers on this. This is senior housing. Every single day, more than 10,000 baby boomers reach retirement age. And over the next 2 decades, our senior population will nearly double. So this is not just a demographic trend, it's also this tidal wave of demand for housing and care. And that's why they call it the silver tsunami, if you've heard that phrase. These aging folks are seeking quality housing and services that really just don't exist. And at the same time, new development has slowed. Many properties are still struggling to catch up from the pandemic years. We'll talk a little bit about that. So there's this mismatch between the growing need and the limited supply. And the reason we're here today is that there's supply and demand problem has created this rare window for investors who are ready to act, ready to help, and ready to profit. It really is, it's a win-win. So we're excited to talk about it. Tonight, I'm joined by two experts to help us explore why this sector is so compelling and what makes it different from traditional real estate, how smart investors are positioning themselves right now. So welcome, JD Singh and Deborah Randall. And JD, if you don't mind going first, can you introduce yourself and give us a little bit of your background?
Thank you, Hillary, and thank you everyone for their evening here today. So I'm JD Singh. I'm based here in California. My background, I was a former surgeon, bariatric surgeon, and I left medicine to continue to pursue development in commercial real estate. The last few years, I've been acquiring a lot of senior care facilities. I currently have a portfolio of six, about 300 plus beds, and I'm about to close on another four end of this year. Couldn't be in a better time. I love the business, and it's all about compassion and also making money, as you'll see in the returns wise. Thank you, everyone.
And I'll introduce myself quickly, Deborah Randall. I've been involved in multifamily for a number of years, but my background actually, I work in emerging economies, currently in East Africa still, even though I'm based on the West Coast, but up north a little bit from JD in Vancouver, BC, Canada. But I've done quite a bit of work on structuring deals and bringing in investment into business in Africa mostly. And so I've been involved in multifamily, but really, the numbers have been good. But in the last year or so, just really started diving deep in the senior housing, because, as Hillary mentioned, because of the great numbers, and also I've been involved in impact investing. I love that dual kind of profit and purpose, and so this really
Okay.
senior housing kind of really brings those two
Okay.
together. So excited to be
This is
here tonight and share more about this asset class.
Now that we've set the stage, let's look at the opportunity itself. On the next few slides, we'll dig into why demand is already outpacing supply, what senior living really is, and why this sector is positioned to outperform traditional real estate. So, Deborah, I will turn it over to you to start with the market opportunity.
Yeah, so I love this slide. I'm a real visual person. So what is so great about this slide is you just see the different generations. And so if you look at the arrow there, you see in 1946, the very first baby boomer was born. So what that means is next year, the very first baby boomers will be turning 80. And what we know in senior housing is when people hit about 80, that's when they start needing a little bit more care. Like they say from 80 on, about 30% of people need help. And then when people hit about 85 and up, then about 50% of those people need help. So we've got this is where we see the tsunami. So you can see in the green there, this kind of demographic rise, and it's going on for quite a number of years. And we're just at the beginning of that right now. But I think what's also really interesting is if you look at the generation before, which was a lot smaller, that what they called the silent generation. And I was talking to an operator about this last week. That generation came through the Great Depression, World War II. It's a very different generation compared to the baby boomers, culturally, compared to the baby boomers, post-war, all the growth, all the dynamism, they have all that housing equity, all those growth years. And this group of people doesn't want to age like kind of back in the day, like their generations before. They want to age differently. They want to age well. They want to have fun. They want to have good food. They want to connect with others. They want quality living. And so that's where you start to see some of those profit drivers. So I think it's not only a demographic tsunami, but it's also kind of culturally the generation that's going to drive those opportunities.
So right now, there is a huge demand. Seniors are living longer. Seniors right now are the fastest growing population age wise. As there is need, there's more services needed like memory care, Alzheimer's, dementia. Then you have independent living and you have assisted living. And within assisted living, there's five different levels of care, depending on the person's sickness or and their needs. As of today, we're about 600,000 beds short. And by 2030, they're thinking it's 1.8. So this is an exponential factor, and it's growing day by day. Memory care by 2030, they're saying about 800,000 short. So right now, the occupancy and the average is about 80 to 89% throughout the United States. And why the shortage is a few things. You can't build these fast enough. You'll be surprised that you'll see some of these facilities are like resort styles. They're called CCSRs. They have pools, martini lounges, a place where I want to move into now. But jokes aside, there's different niches. They have Catholic assisted livings. There's people that are in the same, I guess, geographic, or some in Phoenix, the scenery. I've seen some at the golf courses too. So what I'm trying to say is there's different sectors of this business. And the shortage is you cannot build them fast enough. It's costing about $400 a square foot just to build one, where you can buy them anywhere between $100 to $250 a square foot, existing ones, and adding more efficiencies to it. The construction costs very expensive. And right now, just to demand the pace of this, we need to build at least $1 trillion of these facilities just to go for this demand. There is so much more demand than there is supply.
I really like this slide a lot. You see on the green, you've got kind of no, so the word acuity is a fancy word for kind of care. So you look at conventional multifamily on the left, and then over to the right, you've got hospital or skilled nursing. So skilled nursing is kind of like a step down from hospital, like seniors who need a bit more round the clock nursing care. So kind of in between conventional multifamily and the hospital, you've got all these different levels of care along this spectrum. So if you look kind of on the top, the next one over from conventional multifamily is active adult. Now, these are 55 and up communities. People go in there for shelter, housing like multifamily, but also activities or mostly for socialization. They don't want to live on their own in their big houses where everyone's so busy. They want to actually be with others and actually socialize and connect. Studies show that when people are socializing and connecting, they live well, but they also live longer as well because they're happier. So then over to the right from active adult, you've got independent living. So independent living is like active adult, but with a little bit more help. So they have usually transportation or laundry, and sometimes they will have meals included, although that also can be for a fee. JD was saying these other income drivers, kind of these income opportunities tacked on. The independent living, it can be separate, it can be attached on to other assisted living or memory care in one facility. So then the next one over from independent living is assisted living. So assisted living, if you see below, it's all the same things as the previous ones: shelter, activities, socialization, meals, but also these ADL services. And ADL is just a fancy acronym that means activities of daily living. So it's just people who need a little bit more help. Don't forget to take your meds. Let me help you get up and walk around a little bit. Or then you get kind of the higher levels of care where people need a little bit of help getting dressed or bathed. But the thing about assisted living with the different levels is people are charged a little bit more because they need more staff help, and staff cost money. So that's a way also to kind of offset those costs. And then over one more is memory care, and that's sort of where people are having Alzheimer's, and they need a lot more assistance, but still not quite as much as the skilled nursing or hospital. So we often look at either standalone memory care or assisted living or independent living, but often too, we can look at ones that are together. You might have a facility that's got, 100 units that have some independent living, assisted living, and memory care. The nice thing about that is people can age in place, which is quite nice. So they have that one move and then they don't have to move again. Moving could be really disruptive for people, so they can stay there as long as they can, which we like as investors because we know the longer people stay in a facility, the better it is for us as investors. So it's that win-win again. And then the other thing I wanted to say about this slide that's really interesting, assisted living and memory care, we call those needs-based care. So people get pushed into those because they can't stay at their own home because they need a little bit extra help. So they get pushed in versus sort of, let's say, a little bit more to the left of the continuum where it's a choice for them. So that's kind of the spectrum of the different types of senior living, from conventional multifamily all the way to kind of that hospital care.
Why senior living is poised to outperform traditional real estate. Pretty exciting because traditional real estate is actually doing quite well. But here we have this resilient opportunity. One of the most important things about senior living is that demand is not optional. We've talked about it being needs driven. So when someone needs help with their daily activities, like bathing, eating, memory support. Families can't just delay the moving process like they would with a conventional apartment. The need is very immediate. So, also multiple revenue sources. Unlike traditional apartments, the senior living communities are not relying on rent alone. They are generating income from three major areas. We've got care services, which often is the largest driver, room and board or rents, and then hospitality offerings like dining, activities, amenities. And this mix not only makes the business model more stable, but it also allows for growth as residents and families value the higher quality services. And that really is a huge piece of this, that these quality facilities are kind of not there, and that we have this opportunity to come in and turn them into quality facilities, which is what people are looking for. And then we've got the undervalued and underperforming assets. This is a huge opportunity when many senior living assets are still undervalued because they were hit so hard during COVID. Some remain poorly managed, and we're seeing a lot of these as we evaluate them, which means that there's this huge opportunity for operators who know how to improve that performance. And we, as the investors, we partner with those people. We find great people to operate, and we give them the resources they need. Maybe they are great, but they just don't have the resources. And that creates really a significant upside for investors, both from increasing occupancy and also by improving the operation.
Right now, as Hillary has mentioned, a lot of these places, I say they still have COVID. They still have not got out the brunt of COVID. A lot of them are owned by mom and pop, and they're retiring, and you're seeing a lot of, they're trying to exit. As I had mentioned before, the rebuild cost is much higher than buying existing facilities and making them more efficient or marketing. As far as the financing, the great thing about these senior care homes is that you can get HUD financing. It's called a HUD 232 loan, where you get 40-year loans here at a very steep discount in interest rate. I believe right now they're but low fives. However, there is a process to it. There is agency. Agency is only on the independent living side. So there's very attractive loans out there and products. And a lot of bridge lenders are financing these. It is a hot commodity right now. So they're providing as much lending as they can. The biggest thing in senior care is it's all about staffing. What makes you breaks you is the operator and staffing. That's why it's very keen and very important to find the right operator and staff. This business is all about compassion. Okay. It's not something every day someone can do. And these are people who love what they do, they love the elderly. And so the thing is that is always pay them above market pay and give them bonuses, and it goes a long way. And you have no turnover, especially in this business. There tends to be a lot of turnover. However, you can mitigate that paying of great salary or employee appreciation or bonuses. As I mentioned, this is all about operations, efficiencies, not cutting the level of care, but for example, providing activities. Instead of them staying in their room, they're more hazard to falls, stuff like that. So, having activities, something they can do, get out, and there's studies down that they live longer. There's more quality of life. As far as there's also technology too now in these things, there's sensors out there. If there's a watch they can wear, will tell the heart rates if they fail, stuff like that, or they're active where they're at. So there's a technology, and AI has provided a lot to the services too.
So if you saw the risks, as JD mentioned on that right, the left side is sort of more the kind of the real estate, and we can kind of manage that through buying low, et cetera, moving into HUD. But on the right side, those risks are all operational. And as he mentioned, it's critical to find an operator. So how do we find a great operator? So we typically look at kind of these four key criteria in order to actually find someone that we really that we have trust in. So first, it's we want to have boots on the ground. We want to actually, if we're buying an asset in Georgia, we want to have an operator that is actually already in Georgia and who knows the physicians or the referral networks of the hospital. They know the Department of Health, so that they have those relationships, and also that they have other communities or other buildings not that far away, so they can leverage some of their regional staffing and some of their other staff and learning from their other communities. Not every operator is a great fit for us because we like to buy assets that are underperforming. So we need to have people, operators who know how to turn around these assets. You could find 30%, 40% occupied, or they've got a negative NOI. So it's not every operator that knows how to do that and do that well. So you really have to select those who have a track record of being able to turn those things around in, 12 to 24 months. So we look at that. The other thing we look at is, in general, what's their portfolio? So they might have 20 assets, 15 assets, 30 assets. Overall, what is their average occupancy? What's their NOI, their margin? And so we take a look at all of that to make sure that it's not just one asset that's doing really well, but they've got that system in place and they're lifting all of their the properties that they're managing and operating. And then the last thing is compliance. So of course, this is about people. There's laws and rules, at the state level. There's also, issues around, potential lawsuits if the care isn't good enough. So we look at all of those compliance and we double check whether operators are actually, do they have complaints against them? For instance, there was an asset in Alabama we were looking at, and the operator that was running that asset had 113 complaints filed against them with that one community. So, whoo, that's definitely not an operator we're going to be partnering with, right? So we have to look at all of those public records and make sure that they are complying, because that's, of course, evidence that care isn't so great. So we look at those sort of four things. So the next slide just kind of gives an example of one of the operators that we're partnering with at the moment. And this is in an asset in South Carolina. And we went through this rigorous process of, talking to so many different operators. And we really landed on these guys. And they had very much those four, you know, criteria. You know, they are operating in South Carolina. They've done these turnarounds. You can see the asset on the right here in Colombia, which is not too far from where our other asset is. And they turned it around, went from, you know, a 42% occupancy to a 91% occupancy in 2 years. And it's an example of what we look for and how critical it is to really cross the T's and dot the I's when we're selecting an operator.
These are our email addresses, of course, if you'd like to find us. I know you know where to find me, but there we are. Are there live deals to invest in, or is this just an overview? I can take that. So this is an overview. If you are on one of our investor lists, if you're on my investor list, you will see that coming through when we get a deal under contract and have an opportunity ready to offer. So officially, this is just education. This really is about providing homes, care, dignity, all of those things to an aging population that truly needs it. And at the same time, we're positioning ourselves, and you can position yourself to benefit from one of the most powerful demographic trends in the coming decades. I mean, it is really huge, this silver tsunami. So thank you for joining us. If you'd like to learn more, certainly get in touch with any one of us. Take care.
Thanks,
Thank you.
everyone.
Thanks.
Thank you.
Bye.